Good morning, everyone. It is Tuesday, August 16th. I hope you're having a fantastic morning. Welcome to the trading day. We just had Walmart numbers out this morning, and they are moving on up. Kind of digging into the report a little bit more. We will continue to watch for potential day trades in Walmart. Home Depot, and by the way, Walmart is up testing its 200 moving average just at 138.40-ish. Home Depot, kind of the opposite story here. They reported they did not meet expectations, so they are going to the downside. I would watch for a reversal in those, though, because although they went all the way down and smacked their 20, they're working their way back up above the 8. So watch for a reversal in Home Depot. Okay, let's take a look at our overall markets. Let me just adjust my screen for just a second here. There we go. Now I don't have to try and lean back to see it. Okay, so this is a look at our futures. And every morning we come in and we take a look at this and we look at, some other commodities like the futures of oil and gold and Bitcoin. We look at all these. Well, why do we do this? Well, we like to take the market temperature. So when we think of, taking the temperature of, let's say you have a baby and you take it on their hand. Well, sometimes their hands are just really hot or really cold, right? So we have to take the core temperature. The only way to do that is by going to the core. So there's not a place, one thing you could look at in the market and say, okay, that's it, that's the market temperature. No, you have to take all of that information, stick it together and say, okay, this is the core temperature of the market. Right now, the core temperature of the market is saying, we're pretty much flat. I don't know what we're going to do. We've had some good numbers. We've had some bad numbers. We have a lot of speculation. How is the Fed going to handle all of this data? So I did, in my little write-up there, I put, we're seeing a lot of very conflicting and honestly kind of mean opinions, like going after each other. We've hit a bottom. We didn't hit a bottom. We're in a bear market rally. No, we're not. Okay, well, stop arguing and just wait for the market to tell us what is going on, right? We've had now these last several days some very good price action as we work our way back to that 200. We're still below the 200, folks. What does that mean? It means it's really dang messy for right now. But that's okay. Markets aren't supposed to be perfect and beautiful. But here's what I will tell you. All of the data that goes into whether it's a Fed decision, and this, I don't understand this, as quickly as we can get information today, as quickly as we can crunch those numbers, plug it in a computer and spit out a number and spit out what is actually happening, it absolutely blows my mind that these agencies, right, these bureaucratic agencies have not altered how they work. It does. It blows my mind. So the Fed typically looks at numbers that are in the rearview mirror. And by that, I mean they're in the rearview mirror minimum 2 weeks to a month. So they're looking backwards at, let's say we get another CPI hot read. Well, perfect. But what's happening right now? What's happening when you go to fill up your vehicle? What about your energy bill? Which is a lot less likely to change as quickly because now that those fees are in, they are not coming down. But what about your groceries? Huh? Are you, it's kind of a silly thing, but are you buying potatoes to make mashed potatoes, or are you buying the stuff that, you know what, this is already made, I'm going to pay up for it? And those are silly things maybe to look at, but it does tell us the temperature of the market, of the consumer, right? So when we look at all of this other data, the CPI, which is the consumer price index, where are they spending that money? And you can kind of see some of that looking into numbers for companies like your Walmart, like your Target, your grocery stores. Where are they spending their money? Do we feel like we could buy the case of Coke, or are we buying the generic, right? And there's definitely a bifurcation in this right now. Some people aren't feeling it the same way. A lot of it depends on location. Geography is a big deal when it comes to consumer prices. So here's how I look at it. And I believe that if The Fed looked at the market. We realized we have to have some more tightening. We're running off the balance sheet about $900 billion over the next month or two. What should the Fed do? You know what? The Fed should put on their sunglasses and a ball cap and go to Walmart or Food Lion or Piggly Wiggly. I know I say Piggly Wiggly because it's fun to say. And go shopping for themselves. Yep, I think they should. And then take your receipt and have it printed from last year or the year before, what it would have cost you. There you go. Use that. It sounds silly and it sounds trivial. It sounds simplistic, but we don't have to make it more complicated than that. So I think if the Fed were to look at the now data, not the last week, last month data, they would have a very different picture. I still believe they need to raise some interest rates, but maybe not as fast. Maybe hit another one here in the next meeting, which will be in September. We don't have an August meeting. And then say, okay, we're going to take that temperature again. How does it feel? What's happening, the housing market. We're going to get housing starts here shortly. And what's happening in that housing market. So the data shows that the housing cost is still going up. But if you're in the market or watch the market, or Troy and I have an addiction to constantly looking at home prices, and not just where we live, but everywhere across the country, I don't know, it's an addiction. And you can see things are staying on the market longer. Prices are coming down, even in the new construction. But we have interest rates going up, so rents are not easing as much. But that won't yet be reflected in the data that the Fed uses. So yeah, it's a climate thing, right? I don't know why government agencies are so stubborn to take advantage of the technology we have here and now, understanding that they still need to move like a ship and not like a little bitty sailboat that tacks constantly. They do need to move very methodically and look at everything that's under the water. Whereas that little sailboat can see something and turn on a dime, right? Well, as long as you have wind. Okay, well, my little tirade for this morning. But this is a SPY here yesterday. We were in a channel in most of the afternoon, and you're going to see that reflected. This is the futures, and we're coming right back up to those highs. And this is that channel, so the SPY is green. But pay attention here. We do have oil coming up off of the bottom very nicely here. I am still in those oxy calls. I like them. I was originally hoping to add to some of these because more of a seasonality issue, right, as we come into the colder seasons. So I still like that. Tech, very quiet, much smaller candle here, but look at this. We are testing a natural resistance in the fib line. We are still below the 200. Keep in mind, as we get close to that 200, there may be a lot of pausing and testing and pausing and testing. 200, big move. You can see last time we visited here, it was a fail. So we can go through a whole week or so and still not be able to break through. We will see if that changes this time. Another thing to keep in mind, all of these moving averages, and it doesn't matter if you're on the NQ or the ES, right, or the Dow, these moving averages are very stretched apart. And one thing that we've learned, and this is just a technical analysis, because it doesn't have to happen tomorrow. It can happen in a month from now. Although we do see that we're testing the 200 here in the Dow Jones. As you pull those moving averages apart, it's like a spring, and each coil that you see on this, from the side view, it is stretched out. Eventually that spring is going to want to come back together. So keep that in mind, and that could just mean a little dip down. This could turn into one great big inverse head and shoulders. We just do not yet know, right? So be open, and I think that's what I really want to convey. Be open to every single possibility that is out there. Okay, so I've talked way too long. I'm going to run through these that I'm looking at here for today that I have set up. I'm going to start with NVDA. I like AMD, Mu, all of these, but AMD hates me, so I'm going to play NVDA instead. All of these are in September. NVIDIA 190. I want to enter these around 190.32. They have great volume or open interest going all the way out to the 200s. I want to stay a little closer in case we do get a bit of a rest or a pause. Stop if it closes below the 3 EMA. And I am targeting 192.74, 196.19, and 204 in NVIDIA. That'll bring us up, right? We're just going to come up and test this area, right? We got a nice little triple top, the fib line. Look at that. And we have a gap sitting way up here near the 200. That's a ways away. And we have earnings coming up, so we will not be in it that long, or at least I won't be. Carvana. Yep, came up. Look at, so it started this nice move, right? We had this beautiful squeeze, 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 squeeze. We fired to the top side. We took a little break after earnings, and it looks like a little bull flag consolidation here at the Fibonacci line that's sitting there at 51. I like the Carvana 50s. I know that's in the money. Entry at 51.72, targeting 52.50 and 57.32. Lastly, I'm trying to hit all different sectors here. Etsy, we did just get those Walmart numbers. We can look at other retailers. Target, Home Depot obviously to the downside, but watch for the reversal. It looks good already this morning. Etsy had their earnings. They gapped up. They moved over, right? So we're seeing that same kind of little bull flag setup with a little bit of consolidation. If you draw this line in, you can see we're marrying up with some candles back here. Like the Etsy 120, I want to enter at 118, stop at 115.92. My targets 120.69 and 126.90. Now there's way too many to list on things that will have a bullish setup. AFRM got in this one yesterday. It did not, it came right back in, but inside the previous day candle, we still have a higher low, lower, higher low, higher high, sorry. Had to stop and think about that. So in the still like AFRM and Disney, I sold half of. This is coming right back here today. I like this for a test of the 200, so keep an eye on it. But with that, take a look at plug. These are kind of extended, so, you know, keep your risk appetite in check. Chewy, really like Amazon here today as it's consolidating right below that 200, so I'll keep an eye on that. And one I mentioned yesterday, EXPE, really like this. Doesn't really look like much on the chart. We, you know, we're about filled this little gap. I think we have a couple cents left in here to fill the gap. A lot of time down here, kind of accumulating some buyers. So I really like the look in EXPE, and that's all about travel. Okay, that is it for me this morning. Way too long. I'm sorry that I prattled on for so long. If you have any questions, reach out. Heather C, GivingTreeTrading.com.